This is our Forex blog for July 2nd, 2012, and like we do most days, we want to find the strongest currencies to buy versus the weakest, and we want to sell the weakest versus the strong. This is our currency meter that shows you the strength or weakness of each currency on every other time frame. The real-time histogram on the top is considered strong if it's at the 80 and above in green, and if it's 80 and above in red, it's super weak. This tool is made up of 5 of our best statistical tools. 3 of them measure direction, 2 of them measure the intensity of direction. So anytime it's at and above the 80 line, pretty much 75 to 100% of the pairs are going up or down with, far above average intensity, which means basically those trends are more likely to continue. Underneath that, we show longer time frame trends. 15-minute trend, hourly, daily, weekly, monthly. The more time frames that line up, like the New Zealand, the higher the odds of that trend continuing and allowing you to catch more pips. Really the only secret to trading is having small losses, bigger wins. It's always nice when you have a day where the market's easy and you have 70, 80, 100% winning trades. But most days you're going to take a trade, it's going to be a small loss if it doesn't work. And if it works, it's going to be a small, medium, and occasionally a large trade. Your average wins of your wins have to be 1.5 times bigger than your losses, then you do well trading. It's that simple. So our 3-step Forex system is step 1, find the strongest currencies versus the weak, and the weakest versus the strong. This sortable currency meter now lets you sort it from strongest to weakest. We'll put the strongest on the top, pound, New Zealand, Australian strongest, dollar, Swiss, and euro the weakest. Most of us, for example, the euro is super weak right now. The pound's the strongest, and throughout most of the day, the Australian and New Zealand were the strongest. These are not 2 pairs that I typically leave running, so I'm going to bring up a regular chart. We're going to put euro pound on here, just 2 days, 5 pips per bar, and this is a range chart which will basically show you every time the bar moves 5 pips, it starts a new one. So you can see this fell as predicted because the euro was one of the weakest, the pound was one of the strongest. And a lot of times when a currency is just starting off, let's go ahead and put the Forex trend signals on here. You wait, once you find the super weak currency, you wait for the sell signals to take shorts. Okay, so they came in, and obviously this is pretty much early on in the beginning of the chart, the beginning of the extreme downtrend, and the trend just continued. Keep in mind the euro pound doesn't move as many pips as the euro dollar or most of the other pairs. It also pays more. You make more per pip on the euro pound than most of the other ones. So this is a nice 40 pip drop. And you can use a trailing stop to get out of that trade. You can see this trade worked, and this pullback trade right here also worked. Another feature which we're going to be releasing soon, a lot of traders don't know how much of a pullback to use before getting into a trade. So I've come up with a tool that lets you see a pullback. If the market's super weak, typically a pullback to the 0 area in the middle, or preferably the upper line, which is overbought, is an area where you can look for sales. So once it starts getting back up at least to the 0 line right here, this sell signal makes it more probable. Sometimes you get sell signals right near the low, right when the indicator's oversold. It's down too much. You need to wait for a deeper pullback. You can also see even before this sell signal, this one gave a flip right here much earlier into this trend. Now this is the only reason I'm bringing up this chart without our real-time momentum tools. This is not a currency that I typically leave running throughout the night. The euro was super weak. Another one that was extremely strong is the New Zealand. So this is another one you could be looking for sells on. And you can see earlier today, there were quite a few sells. This one worked. If you would have basically got short here, you lost. This one here had a really huge win by comparison. And there was no sell signals here, but you can see the market had a decent pullback up above the 0 line. Anytime it's at an extreme and flips up, typically the 0 line, from the 0 line all the way to 2.5. I'm showing this a little bit early. We plan on releasing that later this week, and it color codes the flips so that you can see them. Sometimes you don't notice that it had flipped before a bar late. and it's always good to see, on the exact second it flipped. You can see this one's going sideways up here, and it flipped down and it collapsed. And a lot of times you can spot reversals off this. If you make a lower low but the indicator makes a higher low, not a lower low, typically that's a key sign of a reversal. And it's oftentimes at fib areas. If you draw your fibs off the previous wave, look where it's at, right at the fib target. That by itself, this one went down, second wave down, third wave, this is the fourth one. I prefer to buy counter trend trades on 5+ waves down, but nonetheless, with the divergence plus this, led to this nice move up. And you can see once it gets to this level right here, the market has made a decent enough of a pullback up, and you can start looking for sell signals. And there wasn't any at this point in time, probably because it went down statistically too far. Let's take a look at some of our regular currencies, just to give you an idea of how to use the currency meter along with our signals, along with our real-time momentum tools on the charts. Here's the euro dollar 6 pips per bar chart, and you can see on the chart the hourly moving average in the middle. Above that you want to look for buys, below that you want to look for sells. The currency meter is showing pretty much mixed but mostly slightly upward bias earlier in the day. Once it breaks underneath the hourly, it's much more likely to go down, especially when you see this wave down with incredible momentum. The pullback move here does not have that much strength. That's a relatively high probability place to sell. Doesn't meet our stricter requirements of our signals. You do have your first sell signal right here, which you can see fell from about 21 all the way down to 98. Got another sell signal here that worked. This sell signal worked, and this sell signal worked. This one worked. This one here failed. One of the things is, once it starts making a decent sized move, wait for a pullback. Use the upcoming, and I'm not going to call it the Fisher transform oscillator because it's going to be a lot more advanced than the one you see here. But basically, when the market's at and above the 2.5 level, it's more likely to reverse. You can see this slightly pull back a little bit here. The next time it hit that level was up here near the high, and it pretty much fell the rest of the day. When you have a super weak market with incredible momentum readings at and above the 80 level here and here, and the counter trend moves up don't have that much strength, you can just simply wait for it to come up near the the zero middle line here. And when it does and flips, you can see that led to a nice move. Here it made another pullback up, and guess what? It fell. It made another pullback up right to that area right here. Basically, anytime it gets to the zero line or above, and if it's bigger, it showcases a zero there. I personally don't like to see the zero line, but I might put it in as a dark gray line. When it gets near the overbought area, the market's much more likely to run out of steam and pull back a little bit. Let's look at some other examples. Here's the euro yen, and it was strong earlier in the day, just had a massive decline, not only with our real-time momentum tool showing extreme weakness, but also the Fisher oscillator was showing just incredibly oversold conditions. So after it kind of paused here and rallied up, and it came up near the upper overbought area, you might have looked for a trade right here, lost, looked for another one up here at this point right here, and that was pretty much the top of that move up, and it fell the rest of the day. When it gets down near the lower areas, be very careful of a reversal. Typically, the first time it hits this area, it might make one more wave down. You can always draw your fibs off that area, but typically at those fib targets down here is going to be the end of the move, which it was. When it gets down to those areas right here, especially when you see a divergence indicator reading, in other words, a higher low on the value, even though price hasn't made a lower low, it's pretty much at the same price. That's an excellent reversal area. It's very hard to code that up into the computer to look for it, but it's quite easy for a human to spot either a lower low like the previous example I showed you, or a double bottom, pretty much same price where the indicator has a higher value than before. And especially if that's at a major area. This is a 20-day moving average, very key, very strong support area. It's underneath our lower white containment band, which most of the time contains price. Price can on some days fall 10, 15 pips underneath there, but typically reverses, back up to the hourly moving average, which is, 50, 60 pips away.